Welcome to another episode of the Corporate Wala Interview Prep Podcast. If you're preparing for fixed assets accounting roles in companies like Accenture, Genpact, Capgemini, or Infosys, this episode is for you. We'll simulate a real interview with 21 practical and detailed questions and answers suitable for both freshers and experienced candidates. Grab your notebook, take notes, and let's begin. What is fixed assets accounting?
Fixed assets accounting is the process of managing and recording the purchase, depreciation, transfer, sale, and disposal of fixed assets, such as buildings, machinery, vehicles, and equipment. For example, if a company buys machinery worth 10 lakhs rupees, this cost is capitalized and recorded in the books. The asset will then be depreciated every year, say 1 lakh rupees annually, using the straight line method. If the machine is sold for 6 lakhs rupees after 4 years, the accountant removes the cost and accumulated depreciation from the books and records the gain or loss. This ensures the balance sheet and profit and loss account reflect accurate asset values and expenses.
What qualifies as a fixed asset?
A fixed asset is a tangible asset expected to provide economic benefit over more than one accounting period, usually over a year. It's not meant for sale but is used in daily business operations. Examples include land, office buildings, machinery, furniture, and IT equipment. For instance, a delivery van purchased by a courier company is a fixed asset because it's used in daily operations and has a useful life exceeding 1 year.
What is capitalization?
Capitalization means treating the cost of acquiring an asset as an asset in the balance sheet instead of an expense in the profit and loss account. This includes all costs necessary to make the asset operational: purchase price, freight, taxes, installation, etc. For example, if a company buys equipment for 80,000 rupees and spends 5,000 rupees on installation and 10,000 rupees on delivery, the total amount capitalized would be 95,000 rupees.
What is a capitalization threshold?
A capitalization threshold is the minimum value above which a purchase is capitalized as a fixed asset. If a company's threshold is 10,000 rupees, a computer purchased for 9,500 rupees will be expensed directly. This control ensures small value items are not unnecessarily tracked as assets, which could complicate accounting.
What is depreciation?
Depreciation is the systematic allocation of a fixed asset's cost over its useful life. It reflects the reduction in value due to usage, time, or obsolescence. For instance, if a machine worth 5 lakhs rupees has a useful life of 5 years, using straight line depreciation, 1 lakh rupees will be charged as depreciation expense annually.
Can you name different methods of depreciation?
Yes. Common methods include straight line method, SLM, equal depreciation each year, written down value, WDV, a fixed percentage on the asset's reduced value each year, units of production, based on usage or output of the asset, sum of the year's digits, accelerated depreciation method. For example, India's Companies Act often prescribes the WDV or SLM depending on the asset class.
What is the journal entry for depreciation?
To record depreciation, to depreciation expense credit, accumulated depreciation account. This entry reduces the book value of the asset and charges the expense in the P&L. For example, if 1 lakh rupee depreciation is charged, the expense account increases and asset value decreases in the books.
What is residual or salvage value?
Residual or salvage value is the estimated value of an asset at the end of its useful life. For example, if machinery worth 10 lakhs rupees is expected to have a 1 lakh rupees value after 5 years, 9 lakhs rupees is the depreciable base. It helps determine the annual depreciation.
What is asset impairment?
Asset impairment occurs when an asset's recoverable value falls below its book value due to damage, obsolescence, or market decline. For example, if a machine worth 5 lakhs rupees is only expected to generate 2 lakhs rupees in future cash flows, then 3 lakhs rupees is recognized as impairment loss.
What's the difference between impairment and depreciation?
Depreciation is planned and spreads cost systematically over time. Impairment is unplanned and recognizes a sudden drop in asset value. For instance, if a warehouse is damaged in a fire, it may be impaired immediately rather than depreciated gradually.
How do you account for asset disposal?
On disposal, remove the asset's cost and accumulated depreciation. Record the sale proceeds and gain or loss. Example entry: if assets sold for 3 lakhs rupees, debit. Accumulated depreciation 7 lakhs rupees, debit. Bank 3 lakhs, credit. Fixed asset 10 lakhs, credit, debit. Gain or loss on sale account. This keeps books clean and accurate.
What is an asset under construction, AUC?
AUC refers to assets not yet ready for use. Costs like materials, labor, and installation are recorded under AUC until completion. Once ready, it's capitalized and depreciation starts. For example, a company building a new plant would keep all expenses under AUC till it becomes operational.
What are the common controls in fixed assets accounting?
Controls include tagging assets for physical identification, regular physical verification, approval workflow for capitalization/disposal, reconciliation of asset register and general ledger. These prevent fraud, errors, and ensure compliance.
What is component accounting?
Component accounting involves recognizing significant parts of an asset separately. For example, in a building, the elevator, HVAC, and structure may be depreciated separately because they have different useful lives. This ensures more accurate asset tracking.
What is revaluation of assets?
Revaluation is updating the asset's book value to reflect fair market value. If a property appreciated from 50 lakh rupees to 70 lakh rupees, the increase of 20 lakh rupees goes to a revaluation reserve. It gives a realistic picture but must be applied consistently.
What is useful life and who decides it?
Useful life is how long an asset is expected to be productive. Decided based on technical guidance, Companies Act. Manufacturer's recommendation, internal experience. Example: computers often have 3 to 5 years, while buildings may be depreciated over 30 years.
What systems or software have you used for fixed asset management?
I've used SAP FIAA and Oracle Fixed Assets. These systems automate depreciation, AUC tracking, asset transfers, and reporting. They also allow audit trail and tagging, which improves accuracy and saves time.
How do you verify physical assets with books?
Asset verification involves tagging each asset and matching it with entries in the fixed asset register. Discrepancies are flagged and missing assets are investigated. For example, if a computer listed in the books is not physically found, it may be scrapped after review.
What is the difference between tangible and intangible fixed assets?
Tangible assets have physical form, like buildings, land, or furniture. Intangible assets lack physical form, like patents, trademarks, or goodwill. Fixed assets accounting typically focuses on tangible assets. But intangibles also follow similar recognition and amortization principles.
What is the treatment for leasehold improvements?
Leasehold improvements are costs incurred to improve a leased property, like partitioning, wiring, or interiors. These are capitalized and depreciated over the shorter of lease term or estimated useful life. For example, office interiors done under a 5-year lease would be depreciated over 5 years.
How do you handle intercompany asset transfers?
In intercompany transfers, the seller removes the asset and recognizes gain or loss. The buyer capitalizes it at fair value. Proper documentation and approvals are maintained. Example: Company A sells machinery to Company B, both under same group. Books of both should reflect accurate asset movement, and depreciation starts afresh in Company B.
That wraps up our fixed assets accounting interview. These 21 questions cover basics to advanced topics and are frequently asked in interviews at top MNCs. If this helped you prepare, follow Corporate Wala for more interview prep, job updates, and career guidance.